if we used a gold standard, the gold price would have to be $15,000 an ounce or so, something like that, which is to say the dollar relative to gold becomes way less valuable. Not fun, very painful for people who don't deserve that pain, but possible and workable. It's the kind of thing that might save us, but it won't be a fun process. The only people it'll be fun for is the gold bugs, because their main asset will be revalued by 3 times. Maybe it'll triple or maybe quintuple, depending on how it all shakes out. So if you've got a bunch of gold and silver, you're positioned financially to actually benefit from what's coming.
Now Trump appears ready to nominate Judy Shelton, an advocate of the gold standard, to serve as one of the 7 governors on the Federal Reserve Board. From early October 2023 to mid-April 2025, gold soared 88.0% higher in 18.5 months without a single 10% plus correction. That makes this not only a mighty cyclical bull, but a truly extraordinary single monster upleg. Moreover, JP Morgan has recently forecast gold prices to reach $6,000 per ounce by 2029, representing an 80% increase, reinforcing optimistic predictions for the precious metal. Famous investor John Rubino argues that a return to a gold standard is only possible if it becomes the least bad option for governments. In that scenario, gold could be revalued to $15,000 an ounce or even quintupling in price. From a technical perspective, Rubino notes strong parallels between today and the 1970s, characterized by inflation, a declining dollar, and the Middle East conflict. He recalls how those conditions triggered a crisis of confidence in the U.S. system. As faith in the dollar collapsed, gold and silver surged. Regarding today's economy, Rubino warns that the current extreme debt levels make it impossible to sustain high interest rates without triggering a collapse. Massive deficits and rising inflation leave no escape within the current system. By the end of the next 10 years, the Congressional Budget Office projects that America's debt-to-GDP ratio will approach 120% under current law, surpassing the prior record set in 1946 in the wake of World War II. Moving forward, Rubino argues that short of a world war, a currency reset is the most likely outcome. He sees the current financial system collapsing under unsustainable debt. A return to a gold-backed system could restore stability. Before we dive into John Rubino's sharp insights from his latest interview, make sure to hit that subscribe button and tap the bell icon so you never miss a moment when truth meets the market. Let's get into it.
I think, as a baby boomer, I think we should be looking at the parallels between this decade and the 1970s, because, that's ancient history for somebody your age. But for people who lived through it, it was a really consequential time that is very similar to what's going on now. We had raging inflation and a crashing dollar, and gold and silver were going through the roof. And the last piece of the puzzle between now and then was that back then we had a big war in the Middle East that interrupted the supply of oil. And that was one of the things that spiked inflation and caused the dollar to fall so hard. Just in the last week, where we were bombing Iran. Iran was planning, not even threatening, but planning to block the Strait of Hormuz, which is a huge choke point for global oil shipments. And so to me, having lived through the 1970s, this sounded really familiar. And back then in the 70s, that was, it was a financial crisis, it was a political crisis, but the biggest part of it was that it was a crisis of confidence. We lost faith in the American system because it looked like the Soviet Union was in the ascendancy then. And we couldn't control price levels. And the world was spinning out of control, and our involvement just seemed to make it worse. And so people were thinking that maybe America, as we know it, as a capitalist country, capitalist democracy, just isn't viable anymore. And that, of course, feeds into finance. When you start thinking that about your country, you don't want the currency anymore either. So gold and silver, towards the end of the decade, went absolutely through the roof, which is the investment thesis from all of this, and we've had bouts of inflation very recently. We get involved in the world, but the world is super messy, and we don't really seem to understand what it is we're doing out there, and we feel like we're being manipulated by one party or another. And the dollar is losing its value kind of steadily, and that could become disorderly at some point. And gold and silver are now back to going up. So it's starting to feel like that again. And it resolved. Here's the important part of the comparison. In the early 1980s, we resolved the inflation of the 1970s by raising interest rates to double-digit levels. The Fed funds rate went up to like 16% at one point, and 10-year treasuries were up around there too, and I think mortgages were 18% at one point. And that squeezed inflation out of the system and strengthened the dollar. It stopped the dollar from just collapsing. But we can't do that today. If inflation starts to pick back up right now, we have so much debt, because back in the 1970s, we were in pretty good shape financially. We could handle double-digit interest rates without it bankrupting everybody in sight. That's no longer the case today. Everybody is so indebted that if we try to use our one tool to bring inflation back under control, which is much higher interest rates, we will bring about a 1930s-style deflationary depression in a heartbeat. The minute the Fed funds rate got up towards double-digit rates, which is what we would have to do to stabilize things, then that would be the end of the current global financial system. So, that makes this especially interesting from an economic nerd standpoint. In other words, theoretically, what can we do here? And it should make everything terrifying for people who don't spend their days obsessing over this stuff and figuring out just the right investment thesis and everything, and have to live through it. But that's where we're headed. We've screwed things up on such a vast scale that we're basically entering something like the 1970s, but on steroids, something vastly worse. Even if the details are similar in form, the magnitude of everything is going to be so much bigger that what comes is going to be not just something we live through, but something that ends the current system. So fascinating times and terrifying times. Well, barring World War III, which is maybe let's give that a 20% probability going forward. The finances of the major countries in the world and their currencies just keep getting worse. We're in the US, we're running $2 trillion deficits with no end in sight. And the interest on existing US debt is now about $1.5 trillion a year, which has to be borrowed. So that turbocharges debt accumulation and makes all of our problems worse. And there's no way out of it. And the same thing for most other big countries. Japan has the same problem. China has, in some ways, a much worse financial problem. And Europe is just committing cultural suicide and financial suicide. It's virtually over right now as a consequential part of the world. So as that progresses, that means inflation picks up, the world's currencies fall at an accelerating rate. And the only way to fix that is with some kind of a currency reset, where we just, we give up on the current system, like we've done many times in the past. There have been lots of currency resets. The Bretton Woods Agreement in the 1950s was a currency reset. So it's not something that's unheard of or unfamiliar to economists or anything. It's just that we screw things up on a global scale in a way that's never happened before. So it's possible that we can just go back to a gold standard. And that gives us a system that is stable and that allows us to grow organically without, soaring debt and raging inflation going forward. But the only way two things about that. The only way that'll happen is if it ends up being the least bad option for governments on a list of horrendous options. Because to go back to something like a gold standard or some other commodity-based standard, whatever, there will be arguments about what form it should take. But to go back to that means governments have to give up the power to create money out of thin air. And, these people are sociopaths to begin with and narcissists. But even a normal person wouldn't give up that power without a fight, right? And these guys who are in charge of the world right now are going to be very unwilling to do that. So it has to be something that's even worse, staring them in the face. Second thing about a currency reset is that it hurts the people who trust the government. In other words, the ones who don't really deserve to be hurt, just the regular people who have dollar bank accounts that they're using to save for retirement or bond funds in their retirement accounts, things like that. Those things become vastly less valuable when the currency is devalued in order to go to a new monetary system. Because, if we used a gold standard, the gold price would have to be $15,000 an ounce or so, something like that, which is to say the dollar relative to gold becomes way less valuable. And so everybody who holds dollars is hurt by that. So, you got two groups of people, the sociopaths who don't want to give up that power but will be forced to, and the regular people who will be impoverished by it. So it's not a pain-free process. It's just the least painful process. So we have to get through the civil unrest that comes from us devaluing the life savings of 70% of the country or whatever. So
in the interview, John Rubino explains that the recent spike in the gold-silver ratio, geopolitical tensions, and renewed demand for missiles and solar energy have helped boost silver prices. He notes that in every precious metals bull market, investors often start with gold, but eventually rotate into silver, which then outperforms. If gold hits $5,000 an ounce, triple-digit silver becomes plausible and not far-fetched based on historical ratios. Silver prices are expected to rise due to a combination of factors, including rising demand and declining supply, according to a recent report by ICICI Exchange-Traded Funds. The report further adds that the silver market is projected to experience a deficit of 3,339 tons by the end of 2025. Earlier this month, silver prices crossed the $35 mark per ounce and hit their highest level since March 2012, boosted by a combination of factors such as a weaker US dollar, rising geopolitical tension, and robust industrial demand. Let's get back to the interview.
Yeah, because one thing that happened was the gold-silver ratio went to like 105. And there are people who pay attention to that, so that could have generated some buying action there. And then,
yeah, this is silver to gold. It had a big spike up around the same time, to your point.
Yeah, and so that's one thing. And then, yes, we were gearing up for what could easily have turned into World War III. And that's obviously really good for missile demand. So yes, that could be part of it too. Or it could be that just, it's silver's time. It had underperformed for such a long time. And eventually, the way precious metals bull markets work is that people buy gold first because that's the big name in safe haven assets. But then, you at some point you look at a Krugerrand, which is basically a tiny little coin fits in the palm of your hand, and you think of how much money that is. And then you think how many silver ounces. Okay, I'm back to the gold silver ratio. But people switch to silver in the normal course of things during a precious metals bull market, and that leads to silver outperforming. So, it could have been that with a World War III kicker very easily. And, if that's the case, if solar demand continues to increase and geopolitics stays very unsettled, missile demand is a part of that, and gold continues to increase because of all the central bank buying, then, it's easy to envision triple-digit silver. $100 an ounce silver is mathematically not even that crazy in terms of the gold-silver ratio. If gold goes to $5,000 an ounce, it's easy to envision historically. We've been there before in terms of the relationship between those metals. And there's no reason why we can't go there again. And the numbers work out to a pretty spectacular run for silver. So yeah, and kind of the point of all of this is that we can't control what's going on in the world. The world is kind of developing bigger and bigger problems because of gross mismanagement on the part of basically everybody in charge of everything. We can't fix that as individuals, but what we can do is set ourselves up so that we're protected, we're resilient when the world starts throwing curveballs at us. And you do that, first of all, financially, and that's the gold and silver story, and then with other hard assets like commodity stocks, things like that. And then you move on to your lifestyle. How are you going to manage your career to make yourself indispensable? And how are you going to be in your community so that, it's not just you by yourself with a couple of shotguns and a bunch of gold coins, so you're in a place where you're in a community that will hang together and help each other out, because that's the key to survival in most aspects of life. And what this sounds like, right, is our grandparents' lifestyles. They lived like that, just kind of automatically, because that's the normal way to live. You're part of your community. You make sure you have sound money on hand. You make sure you're resilient in various ways, like you can grow some of your own food. So you're kind of preppers. And we're getting back to that after drifting away from it very stupidly for a couple of generations. And so in that sense, it's a good thing. But now we're at the end of that credit super cycle. So the things that used to work are no longer, well, they're still working kind of sort of based on the stock market right now, but you're seeing cracks in the foundation of that worldview for a lot of people because, we had double-digit inflation in 2022. Most of the big systems that we used to trust are just proving themselves to be untrustworthy. Public health is a catastrophe, and the education system is a nightmare. And the guys running monetary policy clearly don't know what they're doing, and the guys running foreign policy are psychopaths. Maybe it goes on and on. Every big system out there is breaking. That's why Trump's president right now, and why the populist parties in other countries are not just doing okay, they're starting to take over. Germany and France, they would be run by populist politicians right now if they didn't cheat. If they weren't prosecuting these populist parties as terrorist organizations or something like that, and trying to jail them. Europe would basically be run by people like Donald Trump, or with the worldview of Donald Trump. And that's because when people stop having faith in the system, then they dump the politicians who created the system, and they look for other alternatives. And populists are really good at rising to power in times like that, because populism isn't really a political philosophy, strictly speaking. It's kind of a sales pitch. A populist politician says, "Look, you're being screwed over by a handful of super rich people. Put me in power, and I'll fix that for you." So it can be Bernie Sanders saying that, or it can be Donald Trump saying that, but they're both populists, and that's what's happening in the world right now. So based on political trends, the percentage of people who are complacent is shrinking dramatically. You've got a lot of concerned people out there. So yes, there's a lot of, especially boomers in the US, who've just had a lifetime of making money, and they're not too concerned yet. But around the world, a lot of people are becoming concerned. And I think that translates into political upheaval, which in turn translates into financial upheaval, which makes the gold bug investment thesis just that much more interesting. So all roads lead to precious metals and hard assets. All roads lead to one version or another of chaos. So yeah, here we are. And you can't really tell people that here we are, though, because if their life experience doesn't match up with the gloom and doom that you're spewing, they're not going to listen to you. So they have to experience some kind of a crisis themselves. And that is starting to happen because almost everybody has been lied to by the government or by some other big important organization in the last few years. We've all been lied to, and we've all been cheated. And so it's different things that we're focusing on, but we all have this sense that things aren't right, and you cannot trust the people in charge.
However, regardless of current events, gold's strong seasonal autumn rally typically begins by mid-July or so. That's initially driven by Asian harvest gold buying. Gold values are expected to increase, supported by various factors despite reduced demand for safe haven assets and fewer projected interest rate reductions this year by the U.S. Federal Reserve Bank, according to the Gulf News. If gold and silver are on the verge of revaluation due to systemic collapse, what are you doing to position yourself before the public catches on? Drop your thoughts in the comment section below. If you find this video informative, don't forget to support our channel and turn on notifications to stay informed about our latest videos. See you in the following video.